What's going on, everybody? Welcome to Inside Guelph, the third show, and I'm really excited to deliver you the new update today. So let's dive right in. I got a little agenda for you here. So hey, let's on today's agenda is the Guelph real estate market. We're gonna go what is on the market right now, what kind of products are on the market, what happened in February. If you want to know what happened in February, check that out. March predictions. What's going to happen in March? So my February predictions were about 98% accurate. So hopefully you stick around to see what I'm predicting for March to happen. Final thoughts and analysis, and then what to do next if you have any questions. If you're watching the replay, we'll have some timestamps in here for you after the fact, so you can skip right ahead to what you want to watch the most. So without further ado, let's get into it. All right, rock and roll. Here we go. We're live. All right. What's on the market? Okay, so here's the real estate market, and we're in March now. So the 5-year average for March is around 230 units for sale in the marketplace. The last time we checked in 15 days ago approximately, we were at 94, and as of March 1st, we're at 114. So the market is adding a little bit more inventory to the market. However, it's still a lot lower than our 5-year average. All right, so what kind of products are on the market right now? So the 5-year average looks like this. We usually have 121 singles on the market, so single-family detached homes, 13 semis, 45 townhomes, 51 condos, and as of today, right now, everything is pretty much in half, except for semis. We got 58 singles, 24 towns, 23 condos, and 9 semis. As you can see, the semi-detached product is underrepresented in our marketplace. So I think it's a great product. Our clients really love them. So hopefully that is an opportunity for some developers to build us some semis and get some more semis into the marketplace. All right, moving on. So what happened in February? So let's take a look at the ending numbers of February. We started February with 67 units of inventory on the marketplace, which, as you can see, is much below our 5-year average of 203. And so when we're in that kind of a situation, we're hoping for increased inflow and either consistent consumption or decreased consumption so we can start building back that inventory. So let's take a look at what happened here. So at our last check-in, we had 11.7 properties flowing into the market, which is well above our average. It was 40% above our average of 8.37. That's where we were midpoint. So let's see how we ended. We ended at 11.11, which is a 33% increase. So it looks like the amount of inventory that came to the market started to slow down a little bit near the end of February. But nonetheless, we had a tremendous amount of inventory come to the market, which is exactly what we wanted. Actually, I'll get to this point a little bit later, but I'll just tell you right now, we actually had the most inventory flow to the market more than ever before. It's unprecedented how much inventory came to the market, which is awesome. On the outflow, on our last check-in, we were consuming 9 properties a day on average, which was 41.4% higher than our usual consumption. And then how do we end? So based on our last check-in, well, we did 8.9, which is 40%. So the consumption stayed strong through the entire month, with listing inflow dropping a little bit at the end of the month. So as you can see here, even with that inflow of listings coming in, the demand just kept right with it and gobbled it all up. Thankfully, it was awesome that we saw that inventory come in. Otherwise, we'd have 0 properties on the market right now, which is a scary thing. So let's take a look at some averages here. So 234 homes on average come to the market in February. I predicted that 327 properties would be coming to market early February, and actually 311 came in. So pretty bang on that prediction there. So 77 more properties came to market than usual in this month. On the flip side, on the consumption side, about 178 properties get consumed. I predicted about 252 properties were going to get consumed, and 249 properties actually did get consumed. So again, a very accurate prediction there, which was 71 higher. So what does this all mean? So how do we end February? Well, let's take a look. 67 properties started the market. We had 311 in, so 67 plus the 311, minus the 249 that sold. But then there was also 21 homes that failed to sell. So even in a red hot real estate market, homes are still failing to sell. So this is expired listings, canceled listings, or the seller just decided to take their property off the market. So that still happens in a market like this. So when you take all that into consideration, we ended the month with 108 units of inventory on the market. Still, we increased. Good news, not so good news, still well below our 5-year average. All right. So what happened to the average sale price in February? And here we go. Here's the chart. I'm going to throw that in here. Here's some numbers for context. January 2020, we had a $523,000 average sale price. January 2021, we had a $707,000 average sale price. And the big reveal, in February, we ended the month with a $735,989 average sale price, which was a $28,000 gain over January, which is 3.96% increase in value. In the time that I've been doing real estate, about 10 years, earlier on in my career, like the 5% mark was a great growth rate for the real estate market in an entire year. 5% in a year would be awesome. We just almost did that in a month, and that's pretty crazy. All right, so that number was based on 249 sales. So that $735,000 average sale price was created through that 249 units that were sold, which is a 107 unit sold increase versus January. All right, let's skip to February 2021 versus February 2020. Here's the graph again. I brought in this number here, 598,000. That is that's the average sale price that we had in February 2020. And as you can see here, the average sale price is $735,989, which is $137,000, pretty much $138,000 gain, a 23% gain year over year. As you can see, the market has just been phenomenally good to those that got into the market. And I don't know, I'm not sure if you're seeing what's going on in the stock market these days, but real estate's looking like a really good, stable investment with steady growth, and it's not nearly on the roller coaster that the stock market is on right now. All right. So as we can also see here, we sold 34 more units in February than we did last February. And again, we actually sold more units in February than ever, and more units came to the market than ever before as well. So just crazy amounts of growth that is happening, and some records being shattered. All right. So let's go over some good news here about what we just saw there. Good news, we had an inflow increased to unseen levels to match demand. Whoever got into the market is doing really well. That's obviously good news. Anyone looking at retirement or needing to exit the market right now has a golden opportunity to cash out. And I'll cover a little bit more about that in my final thoughts and analysis. So stick around for that if you're interested. Not so good news. Well, here I'm going to read this a little bit. Demand was so high that the increase in listings didn't balance the market. So what the ideal scenario is, the increase in listings would balance out the market a little bit and cool it off. And like we got our wish, the listings came to market. But Guelph not only saw the highest amount of inventory flow to the market, but it also saw the highest number of sales ever in February. So the demand just kept right up with the listings. Sellers are clearer than driver's seat right now, and buyers are taking risks that aren't common in traditionally balanced real estate markets, such as they're buying homes sight unseen, they're not doing any home inspections, they're going in with no conditions when they might need some, like AKA financing. And there's so many multiple offers, like so many people are throwing in offers right now. Some buyers are just coming in and throwing moonshots in there, and it's really just accelerating the market at a neck-breaking pace. Try to say that 5 times real fast. All right, awesome. Moving on, and also not so good news. I'm not sure if I've been in real estate for a long time now, and ever since I got into real estate, you would see the news articles, the doom and gloom, the clickbaiters, just people just talking about how the real estate market is always going to crash. If you were sitting on the sidelines over the last 10 years waiting for this crash to happen, it doesn't look like it worked out for you. Additionally, if you're going to continue to sit on the sidelines and try to time the market, you're probably going to do yourself a disservice again. I had some really great investment advice given to me a little while ago. It's not trying to time the market, it's the time in the market. So if you're thinking about jumping in, jump in. Right now, money is really cheap. Have a good opportunity to buy. And the good news is that there's still good deals out there. You just need to work with someone that navigates the real estate market properly to get you that deal that isn't going to be against 20, 30 other people that are just throwing moonshot offers in all day. You need to have a strategy. So I'm going to do a shameless plug here. We are the Zon Team Real Estate Advisors. This show is sponsored by the Zon Team. And at the Zon Team, I'm not sure if you know this, your 5-star real estate experience awaits. We actually have a guaranteed 5-star real estate experience. You can check out all the Google reviews we have online, all the Facebook reviews. We have over 200 5-star reviews, and we're so confident that we're going to be able to deliver that for you. If we don't give you a 5-star real estate experience, we pay you the commission back that we actually earn back to you. So you have a risk-free experience with us. And on top of that, a strategy session, it's no obligation. You take 15, 20 minutes of your time, and we get some crystal clear clarity on your goals, as well as create some deliverables that you can make great decisions with, and that's all no obligation. So if you have any questions about the real estate market, you have any questions whatsoever about jumping into real estate, book a strategy call with us. Let's get you set up and rocking and rolling. Okay, let's move on to the March predictions. This is always the funnest thing when you try to predict the future. So right now we got March is starting off with 108 units for sale in the marketplace. And as you can see, I'm bringing in some averages right now. On average, we get about 9.34 properties to the market every single day, which ends about around 290 properties coming to the market in the month. Okay, based on the last 15 days, which is usually how I do my predictions, based on the last 15 days of sales, we've had 11.2 properties flowing into the marketplace, which would represent 347 properties flowing into the Guelph real estate market in March, which is awesome. That is a 20% increase over the 5-year average, which is exactly what we need to ramp up some inventory so this demand can be fed properly, I guess. On a 5-year average for the outflow, we sit around 7.1 homes flowing out of the market every single day, which would equate to 221 properties being consumed in the marketplace, right? So what is going to happen in the last 15 days? Well, we're actually sitting at 9.3, which is a prediction of 298 properties going to be being consumed in the month of March. That would be a 31% increase over and above what we usually do in the 5-year. So again, I mean, at least the nice news here is that we actually, if the predictions hold true, 347 is more than 289. So at least, more listings are going to come to the market than being consumed. But it really depends on how many people fail to sell as well. That'll be interesting to see. All right. So if we take the number of 21, that's what failed to sell last month. If we predict that 21 homes will fail to sell again, we should probably end the month with 145 units of inventory on the market. Based on the 230, which is our average, we're getting a little bit closer to potentially that 5-year average, but still we're going to be very, very well below our 5-year average again. And this is the months of inventory analysis right here that I just pulled up, and we're sitting at under 1 month. We're sitting at half a month of inventory on the market. So let me explain to you how that works. So if we end the month with 145 properties on the marketplace, and we're expecting, let's say, no new inventory, so March ends and no new inventory comes to the market, but our consumption stays the same and it keeps at that pace of 9.3 properties a day, which is about 289 properties a month. So if we have 145 properties on the market and we consume 298, well, all the inventory will be gone in half a month. That's how we measure how hot a market is based on months of inventory. The last time we checked in, when I started doing this show back in January, we were actually at 0.9 months of inventory on the marketplace. So we are just month after month just getting a little bit hotter, a little bit hotter, a little bit hotter. And right now we're sitting at half a month. So it's not getting any cooler, anybody. So if, we could talk about that in my final analysis of what's potentially going to come. All right, cool. So let's just do a high level overview. Listing inflow through the roof, consumption through the roof. Thank goodness we had a listing inflow through the roof. Otherwise, this would be really bad. Days on market through the floor, never been so low ever. As you can see, this is the yellow line I'm looking at, by the way. List price to sale price ratio through the roof, right? So as you can see, opposite here, never been so high before. And homes available in the market, as you know, is almost zero. And why is this potentially happening? Well, one reason you can explain this is, well, more buyers are able to be in the market right now, right? I just looked up interest rates today, and you can get a 5-year fixed at a 5-year variable at 1.25%. So as you can see, the fixed rate was dropping from 3.24% to 1.25%. It's just been dropping consistently, which is letting more buyers into the market. So if you couldn't afford a home, you can afford a home. If you could afford the $500,000 home, you're buying the 700. So it's just pushing everything up, right? Interesting as well, over the last year, the qualifying rate. So for you to qualify a mortgage, you don't qualify at 1.25%. You actually have to qualify and prove that you can afford the house based on an interest rate of 4.79 as of right now. That's actually come down 3 times in the last year. So as this comes down, it's just allowing more buyers to enter the marketplace, right? So again, it's just there's just everything is kind of steaming this marketplace to be hotter. And let me just point some parallels to you. If you've seen this before, you'll see it again here. All-time inventory low is right now. Another time it was this low or close to being this low was in 2017. Days on market, super low right now, lowest it's ever been. The other time it was close to being this low was 2017. List price to sale price ratio, highest it's ever been. Last time it's been close to this high, again, was 2017. And I'm actually going to skip to one more slide back, and I'll jump back here again. Back in 2017, this is what was happening. If you do a Google search, government cooling housing market, you'll see that articles actually are being published or still online, obviously, from CBC and from the Globe and Mail right here. And it was talking about, hey, what can the government do to cool the housing market? People were talking about cooling the housing market back in April of 2017. And then at the end of that month, the government revealed 16 measures that they're going to take to cool the housing market. So the last time we saw this was in 2017, and those 2 of the biggest things they did there was implement a foreign buyers tax to cool the housing market, to cool speculation, as well as they introduced a new stress test for people with above 20% down, which had made it more difficult to afford properties if you had 20% down. Because if you had 20% down back then, and the interest rate was 1.25%, you would be able to qualify on 1.25% because you had over 20% down. They changed that, so then you had to qualify at the qualifying rate, which would make a lot of opportunities unaffordable for those potential buyers. Again, cooling the housing market. Okay, so that's what happened in 2017. So if that's what happened in 2017, and the market is almost twice as hot now than it was back then, do you think that the government might step in again to potentially cool the housing market? I would love to hear your opinion on, do you believe, whether or not they do or not, do you feel like they should step in and cool the housing market? Do you feel like it's getting out of control? Instead of doing the opposite and lowering the qualifying rates to make it hotter. So yeah, it's very similar. It's actually hotter now than it was back then. And back then, if you bought at the very peak, it took you 3 years to recover that opportunity to sell the property back to the marketplace at what you bought it for. And on the flip side of that, if you were a seller and you're close to retirement or you need to sell for some reason and you decided to wait, it took you 3 years to almost it took you 3 years to essentially be able to resell your property at that same value. So if you're thinking about offloading, I honestly believe now could be the time. Now is the time, because if the government steps in next month, we'll lose that opportunity, right? So again, if you have any questions, if you want to know what this means to you or your specific situation, like I said, reach out to us, book that strategy call. Let's have a 15-20 minute conversation. Let's get this process started for you, no obligation. So at least you have a clear understanding of what your options are and what the future could potentially look like based on the decisions you make today, right? At the end of the day, it's all about what we decide to do and what the outcome is of those decisions. So again, I hope you enjoyed this. My name is Steve Zahn from the Zahn team, and if you are interested in following us, I put the Instagram there. It's at the Zahn team. You can see what we're up to day to day. Also, you can subscribe to this channel for any time we go live or we do the replay. You can make sure you're alerted about that and catching the latest info. We'll be back with another show in 2 weeks, and I'm really excited to be adding more segments to this show. If you like this show, we love to get some feedback and know that you're enjoying it. Again, my name is Steve. Thanks again for watching, and I hope you have a great night. Thank you so much.